Welcome back, guys. Today, I'm going to explain my two trading strategies. I guarantee you never heard at least one of them trading and investing strategies. Not going to gatekeep. One of them is IPO trading and flipping, and also swing trading with limit orders. And number two is buying and selling Ethereum DATs, digital asset treasuries based on MNAV. So it sounds complicated, but I'm going to get into all the nitty gritty stuff. Here's some memes to start us off. Don't talk to me. The market is still open, and this little cat trading. They're pretty funny here. Well, basically, with regular day trading, right? That's the big thing. We have TGR, we have a bunch of gurus. Personally, it's not my thing. First of all, it takes time right here. See, people think you can become a day trader really quickly. Like, oh, let's start an online business. Oh, let's start drop shipping. Oh, let's start trading. Well, I've actually done both of them. I've tried drop shipping and I've done like a real day trading. It takes time, right? To be a doctor or a lawyer, you have to go to medical school, you have to go to the bar, you have to go to law school, and it takes like many years, 5, 10 years. You can't expect to be a full-time trader or become a side hustle trader in just like a couple weeks or even a year or 2 or 3 years. It's a full-time commitment, and some people are just lazy and don't have that commitment and they won't see results. It's not going to pay off, and you might end up losing money, right? The money you put into this might actually losing money. Like the people that are selling you these courses, telling you to day trade, they don't do it as a side hustle. That is their full-time job. I guarantee they do not work a real job, or if they do, it's some sort of like 9 to 5. And it uses day trading uses technicals, right? It just lines in the chart, trend lines, volume, whatever you use. If you use like future mini shares, whatever you use, it's technical analysis, zero fundamental analysis. And I actually hate that because I invest in the stock market as well, right? But another thing I hate about it is because day trading is like it's like a full-time thing, right? There's no like traders and investors. Well, I like to do both. Like I want to build my money up long term, but I also want to do this small thing on the side with a portion of my portfolio to try to actually enhance my gains over time, and also a good amount of risk to reward, right? It's emotionally draining, right? If you put no effort, it's not equal reward. You can put all this time, all your money in, instead of like a 9 to 5. If you just worked, you know you're getting money, right? But if you try day trading, it actually doesn't work out. You've done this for like a year and a half or 2 years, then you basically had nothing really to show for it. And then that's that, right? Really, really, really risky and really, really hard to do and emotional draining, right? When you have where to put your stop losses, you're doing it day by day, losing, winning, it's going to be emotional draining on you. And finally, we have competition here, right? Whenever you're trading, whenever day traders say, hey, come trade, they're just making the competition feel easier because you're newer. Some people have years and years of experience. There's Wall Street traders, there's quants from JP Morgan, Goldman Sachs, all of that. You have to be competing with all of those people, and that is way too difficult. You want to find the easiest strategy, basically. And I don't really even consider myself like trading, but like for the sake of what other people say, oh, you trade, like, fine, whatever, yes. Who to trust? There's so many gurus, so many things. I'm not a guru, don't have a Discord, don't have a course. Just gonna basically explain what it is for myself for the future. So first of all, we have IPO investing. Basically, what you can compare it to is meme coin investing. You know meme coin investing, like where you have random pump and dumps, and you try to find the next big thing, the next Pepe coin. That's a lot of BS, right? Well, IPOs, it's like this meme coins for the stock market, right? These are companies that have built foundationals that are going public on the stock market for the first time. Like there's a bunch of private companies, right? In and Out's private. There's OpenAI is private. You can invest in them, and when they want to go in the stock market, it's in a form of an IPO, initial public offering. So we can take advantage of this because one, there's only going to be buying pressure because when it first publicizes, that's the only thing that can happen. Only things buying. And number two, all the eyes are on this one thing. There's not thousands and thousands of meme coins or stocks coming out every day. There's like one or two, or maybe 6 a week, or maybe there's none that month. So you don't have this is not an everyday thing. Wake up 6 in the morning, slug around. This is whenever it decides the opportunity, and it'll give you plenty of time. It'll give you weeks in advance to do preparation, research, and it's not even that difficult, which I'm about to tell you. So as you see, most of them do well, and even the ones that don't give you a little opportunity. You see this pump? That was a 40% pump just right there in like the first 10 minutes you can take advantage of. Really simple. And if you have a tight stop loss, there's really nothing holding you back there. And my second strategy is Ethereum, specifically digital asset treasuries. You might have heard of micro strategy here. But basically what it does is you look at this. It sounds complicated. It's really not. Let's look at the first. This is the only line you need to be looking at. This, I'll be able to give you updates. So you need to, for the strategy, you really need this update every single day. And to get this exact spreadsheet, all you need to do is follow Risk on Bobby, and he provides you updates using Excel and also informational AI to do this every single day. You see, he did this one. He did this Well, he did this one yesterday, and then he did the day before, and the day before, October 13th, and he does updates to MNAV literally every single day the stock market's open. Shout out to him. There's other ways to do it, but he's definitely the best man for the job here. So, what is this? So basically, it's really simple. You know, stocks that you have to when you're valuing a stock. We're using fundamental analysis, right? When you're valuing a stock, you have different things. You have to look at earnings estimates for the future. What are they going to do? Backlog. DCFs, cash flow models, like moats, everything like that. It's really, really difficult. But for things for digital asset treasuries, the thing, DAT, what it stands for is the company either says, one, we're going to create a new company, or two, says we're going to screw everything and we're going to buy one cryptocurrency. That's right. All they do is buy and hold one cryptocurrency. That's your entire company. Don't make revenue, nothing. So it's really, really simple for us to track and to take advantage of. And especially when the FOMO hits, that's when these MNAVs really run. So what does this mean? For example, let's see right here, 1.34. What does this mean? That means the price of the current stock is trading at a 30%, 30% expensive. Because if it was at a 1 means that's the amount of assets it's hold is the same with stock price, right? So it only buys Ethereum. So all I have to do is take all he does is take advantage of cash, Ethereum, and then whatever assets they hold, like shares of a different company, adds it all up and takes into account the stock price. So let's say Ethereum moves up 2%, but then Bitmine right here, BMNR, moves up, ticker symbols right here if you want to look in them up. Let's say they move 4%. That means their MNAV would go higher because they're trading at a higher premium, is what we call it, versus these other ones which are trading at discounts. So, and even BTBT at one point, like 2 months ago, was trading at a 50% discount, which means you're essentially buying Ethereum for 50% off. Isn't that amazing, right? But we're really looking at BMNR here, BTBT, and SBAT as only reliable ones, because what happens is some bad companies that are doing terrible just say, hey, heck, we're just going to screw it and we're going to go in one of these. So, because basically another way you can also trade this, which I don't do if you look, is the initial pump. The initial pump of these when they do announce themselves becoming a digital asset treasury is crazy. And that's literally a free short on that, which I'll show you exactly how it works right now. It's the same for all the others. Look, you go to SBAT. If you go to SBAT stock, it's sure to be the same exact chart. See, look, a high spike, back down again. Let's go BTBT stock. Same exact thing. Less of a spike on BTBT. Let's go to this one. How do you go to this one? Huge spike, not as big as spike. We have a spike just back to fair value. That's how it works. When they announce these things, straight pump and dump just for cash. But these are the exception here, these three. So what's going on here? We want to find the best optimal times to buy this thing. So I'm just looking here. You're like, why are these trading at a discount, right? Isn't that free money? Well, we have to look at the quality of the company and the size. BMNR is by Tom Lee and like other big shots named Peter Thiel, Kathy Woods. Maybe you've heard of some of them. But the thing is, we need to know exactly what is the fair value, because the fair value is obviously one, but what are the fair value the market has put on these? So it's really, really simple. I add them on the right here. So BMNR, I accumulate my BMNR at 1.10 MNAV right now. And in an uncertain market, like right now, it's going to trade at 1.3. In a bull market, let's say we go back to permabull, 1.6, which will instantly swing up 30%, which is just free. Of course, the underlying asset is Ethereum, so if Ethereum tanks, we're just screwed either way. But the thing is, Ethereum is one of my favorite assets, which I will get into. Then we have momentum. Let's say super momentum. It hops like a rich check robotics open door, which will eventually happen. It will be at 2 to 4. And that's when you say, hey, I understand the valuation of this. It will eventually come, but I know it's overvalued. I'm going to, one, write covered calls if I have 100 shares to limit my downside and get a premium. Or two, I'm going to sell my shares. Or three, I'm going to do a put option on this to short it with leverage. And in recession, if this thing hits, usually the digital asset treasuries, since they are more higher risk and the actual asset themselves are going to be under 1 MNAV. For this one, 1.1. If you look at BTBT, I literally bought it at 0.5 and I literally sold at 1. Uncertainty, right? It's chilling at 0.7. In a bull market, it's going to be 1. Momentum, 1.2. Recession, and the same thing for, that's supposed to be SBAT right here. Don't ignore that. That's supposed to be SBAT. So that's basically what I really do. Buy and hold them, puts, calls. And I've been accumulating a lot of BMNR. I have almost 200 shares of there. And basically, once this thing takes traction and it runs, it's going to be easy sell, easy covered call, easy put on that. So don't really care about the fair value model. That's honestly pretty biased. But looking at MicroStrategy, this was basically the first ever DAT, but this was for Bitcoin, not Ethereum. We can see it usually trades around like this 1.3, 1.6 range, but then we have this crazy explosion here of when the hype comes, people are like, oh my gosh, buy, 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 and eventually it comes back crashing down back to its MNAV, and currently right now it's actually at 1.3 again. So this is a free to take advantage of. If it shoots from 1.3 all the way to 4, that's literally like a 4-5x even if Ethereum runs too. And the thing is, I like Ethereum more than Bitcoin right now, which I can get into a different video, but you can look into the reasons why. There's stablecoin adoption, there's Project Crypto, and then Trump being in the office for at least the next 2 years is actually amazing for crypto. He's the only president to pass multiple pro-crypto regulations. So if you're in crypto, large cap crypto, congratulations to that. So why I like his strategies? Really easy and simple to explain. Like, compared to something you would have to learn, takes years and years to learn and do your strategies, this literally can be learned in a day. Maybe like there's a lot of people in my streams. Like, I stream this. I have hundreds of people in my stream. We go over the IPOs together. I make videos on the Ethereum treasuries, and I make IPO rankings guides. Really, really simple. Everybody loves it. Based on real fundamentals and hype. Like for IPOs, we can look at the hype and also the valuation side. Everything. It's not really a full commitment. Like, this is my favorite part. Like, I have an investment portfolio. Like, I hold the S&P 500. I hold growth ETFs. I hold Amazon, Google, Uber, stuff like that. You can just commit whatever proportion of your portfolio you want. Like, you say, hey, I want to accumulate BMNR, or maybe I want to put on my watch list, and then a recession it hits like under a 1 MNAV. Okay, I'm going to add. Or maybe I'm just going to add some now and wait for it to hit 2, or maybe eventually hit a bull run and I'm just going to sell out. Or maybe I'm just going to grab 100 shares and write covered calls on it constantly, right? And then IPOs, it's in your spare cash. If you have any spare cash, how it works is you request shares from which I'll show you, and things that's not every day. None of this is every day. You don't have to commit anything. All I have to do is learn the simple functions of this, watch a YouTube video or two on mine, and then you're good to go. For IPOs, main thing you need is TikTok, AI, YouTube, Robinhood, maybe Roth, and I'm going to explain. This is like the fundamentals you need for this strategy, the first strategy. TikTok. Well, there was Cards and Invest / Jonah, which I would have shown you his TikTok, but he just did a crazy rug pull on his audience, which is actually insane. I would never rug pull you guys. Hopefully you guys believe me. But yeah, TikTok is just to assess the hype, right? When IPOs are coming out, they're hot, they're fresh, like meme coins. Like, everybody's going to be talking about them because they're the only that the eyes are on them. So you go here, boom, the eyes are literally on them with the IPOs. Here's the newest one right here, but we're just going to go to all of them. You see, here are the ones that have been launched. They've almost all done well. And I'm telling you guys, since right here, since Circle, there has not been one IPO to be down on the first day of trading. There has not been one IPO to be down the first day of trading. That means if you bought all of these on the first day and sold within the first day, at some point you would have not lost any money. That's honestly crazy, right? The hit rate for right now is absolutely crazy. Of course, they're all not going to be like Circle where they make like 300% and just go straight up. But even the trash ones, like I said, look at where's Gemini here? Small company, $2.8 billion valuation when it opened. A fast mover is what I call it. There's fast mover and slow movers. We're going to get into that. But it has an insane spike just on the fact that it was a crypto company, even though they were drowning in debt, even though their business model was way worse than Coinbase or Robinhood or any other crypto platform. They absolutely shot up. And you can take advantage of the free 30% right there. And even if you bought an IPO, you would have even got a better price. So you may be thinking, well, Josh, you can't get IPO prices. Well, now you can at Robinhood. All you have to do is see which ones are in flight. Well, you have to follow this and I'll give you a notification. And then you edit your request. You can request literally as much shares as you want, however cash I have. Sometimes I requested $10,000 worth of shares. I know people that have requested millions and millions of dollars worth of shares and get some of them. But the thing is, if there's a lot of hype and it's a really, really good IPO, you're not going to get a lot of shares. So that's where the other part comes in, and you're a limit order here. So basically what you do with a limit order is, let's say you don't get filled, right? Because you have to request shares, and there's people ahead of you. There's Elon Musk, there's Warren Buffett, there's Berkshire Hathaways, there's angel investors, millions that they're going to give shares to first. So what you can do is, it says on Charles Schwab, I just go to the buy, I go to limit order. By the way, the ticker gets released the night before it comes out or the morning of. So if it's one day, like every so often, you might need to wake up. If you're busy, don't worry about it. Just hit the next one. But if you want to trade IPO, you have to wake up during the day. And for a limit order, all you do is hit your limit, and you know the price. This is an example. Let's say the IPO price was 50. Easily, just double it, because we don't want it to go 50% and then not get filled. Or 100% and not get filled literally like the night before. So I just do double as a safety haven amount of shares. And the thing is, if you have like $1,000 and you're gonna do $1,000 request for like how many shares, you're not gonna get all that filled, right? Because you see, you put $100 and it opens at 80, well then you're gonna get all the $20 per share. You're gonna get it back because it'll only fill what you got, which is nice. And then you can just watch it, and it's either gonna shoot up instantly or it's gonna go flat. Like, how do you know? Like, that's kind of stupid, right? Well, the thing is, it's actually not that stupid. It's actually pretty simple. Like, for example, what was a fast mover, right? Bullish is a Figma is a insane fast mover. It's really simple. You see, there's basically no dips here. Once this thing you limit order this baby. Well, if you got on pre-IPO, this straight line up right here, see front cursor, this straight line up, half of that was pre-market. What IPOs do is on the day of, they don't open at the market open. They have to process all the orders, and they let basically all the big dogs, JP Morgan, Elon, Warren Buffett, they let all the big dogs trade before us. I know how this fair world works, but they trade before us, and then when it comes out, boom, and also popped up more. Why? Because people don't even own the shares in the first place. So the thing is, there's barely any selling pressure and a lot of buying pressure. So it's most likely if something's hyped like this, it's going to explode up. And that's just a free 50, 25%. And a free, like almost 70% if you got on pre-IPO. So pre-IPO is basically just free money on a good company, and limit orders where it gets a little risky. But the thing is, it usually explodes right up. Let me go but yeah, if it's gonna, or it could break even, like flatline. Or it could flatline right when it opens. What that means is there wasn't enough buying pressure with the limit orders, and people enough selling right at open. So it's really simple. Since all the limit orders went in at once, so it's what's going to happen is it's eventually going to start pushing to the downside pretty fast because it's a fast mover. So you want to get out before that happens. But it's pretty simple. If it's going to bolt up, it's going to bolt up. You're going to see a stock price absolute rip, and you're going to make a ton of money, or you're just going to break even. You're just going to get out before it starts, because it's like, man, let me have a slow mover. What's a slow mover, right? So something with less hype. Here's Pattern. This is a B2B stats company right here. This thing wasn't as amazing, you see. So you see, it did okay, but then basically what happened is, it doesn't show it here, but basically what happened is at the very, very beginning, this thing actually opened under its IPO price at $14. So it was at like 12. So it's like it was like a 7% down. But the thing is, we looked at the financials, we looked at the valuation, we saw that this was a good company. So what we did was, on my stream, the Pattern IPO stream, we bought it at a 7% loss, and it swung up plus 7%, we can see here. Because, like I said, an IPO has never been down on the day. Not yet. So I stuck with the heart, we bought that, and it went from 7% down to 7% up before we sold, and made 14% profit on that. Pretty simple. And even if you were just to sell out here, you wouldn't have lost anything at all either. So, yeah, there's that. And then, yeah, there's plenty of other IPOs that come out. Like, they've all been amazing. Once in a while, you get a bad IPO, like Stub, that might go straight down. But the thing is, when it opened up, it didn't show it here. There was always a spike up. Like I said, at least at one point, it was above its IPO price at one point. And then once you see that it didn't make that move up, it was stalling. Right after it stalled, it tanked, right? Because we can see this gradual slowdown. That gave us time to get out of that play, versus something like Gemini, which you can see just straight up, or just like Figma or Bullish, that was literally, look, you see how much straighter that is? You see how much straighter that is? It's straight up there. And yeah, also this isn't, also what to note, this straight line isn't really the IPO price, because this is what happened in pre-market. You see how it's underneath the white line, but still up 50%? That's because in the pre-IPO price, Figma was already up 100% before it even came out the market. That means if you got pre-IPO shares, you would be up 100%. And if you got limit orders, you would still make money, you see? So that's basically what I do with them. I've a ton of them. I've called ones people have in, like Phoenix Education. This is one of my favorite ones. I made a video on it. Like, people were saying this wasn't a good company, but I did my research. What you have to do basically is you have to look at its financials, because even if it's not the most crazy hyped company, you look at the financials, and what was happening. It had 100% year-over-year revenue. It was a $6.3 billion valuation. I made the video right here. $6.3 billion valuation company, and it had the same exact income as the 10 billion. Sorry, it was less than that. Sorry, it was like around a 1 billion valuation. But the company that was 3-4 times its valuation on the open stock market had the same exact income. It was 3 times undervalued EBITDA, price of sales, everything like that. It was super. Look, even like in this video, I said it has a deep discount versus its peers, basically, and it still trades actually at a 10 PE ratio. So, but then we got hype like Gemini, terrible financials, but then it pops off at the first day, and that's what we take advantage, and then we just dump it before it actually just crashes because it was a terrible company, right? That's basically how it works. And there's a lot more fundamentals we go over here. So here I literally post videos on IPO. That one did amazing. IPOs. I ranked them. I put Waterbridge at 1. That one did the best. This one I put a Figure at 1. It did the best as well. And then I post occasionally on the Ethereum treasuries like Beam and R. That's the one I hold most of. A lot of money in that one. See right here, Figure, Waterbridge. I do those on my YouTube videos. There. Like, you see, we can do hype over subscribe rate. Yes, we need hype. Look at financials. If you want to learn how to do them, if it's a good IPO, I will post a video explaining everything on it. Compared to similar stocks, I went over fast movers and slow movers. And you also got over halts too. You know what happens? Like, look at Gemini. If it's going to move up in a straight line, or like a better one, where's Figma? If it's going to move up in a straight line, basically what happened is there not enough shares for the people that are buying. It will literally stop, and you will not see it move for like 30 seconds to 30 minutes. That if there's a halt up, basically that means there's so many buys that it couldn't keep track and it stops. That's going to follow by a gap up. That's why it's such a straight line. But then once a sell-off happens, if it's also a faster sell-off and there's too many sellers, not enough buyers, it will halt down, which was a gap down. So once a thing's halted, that's a sign, hey, it's a good time to get out. I go all over this in my streams, by the way. Like, here's one of the things I do. Like, I go over everything founded, no revenue. And then for Fermi, the last one, I actually, the reason I did so well, the co-CEO was a former Texas governor and energy secretary under Trump, and wanted to be the number one hybrid nuclear energy plant in the entire United States. So, and there's some rumors saying it was going to be backed by Trump. A big thing is you have to be looked who backs this thing, because also assessing rug pulls. So it's like a meme coin, but the thing is the creators can't even rug pull you. Why? Because when people back this thing, they have a lockdown date. If you know how we can request shares and we most likely are going to get basically nothing. Well, the people will say, hey, I want a bunch, and you're going to give me a bunch because I got millions of dollars. They can't sell right away. How crazy is that? That's why all of these are basically green the first day, because they can't sell. That's why I said there's only buying pressure. That's literally one of the best things in the stock market. It's literally the like bigger brother of a meme coin, and you can look at the fundamentals, and they give you a week in advance to prepare. It's literally just like that, and that's literally what I love about IPOs. Yeah, and then what else do I do? Let's go over some warnings I told in my last video. And if you get pre-IPO shares, you want to sell them ASAP if you want to make money. If you want to make the most money at open, if you want to make more money, you wait 1 to 10 minutes and wait for that jump. Or it could like jump down or trade even. But this is not really for busy people. Like, if you're busy during that day and then like the IPO comes out, you have to like be on it. Because you can't pre-sell, but you can pre-buy. So you can't automatically sell it. So once it comes out, keep watching, put your stop. Oh. Best chance is not get restricted. Like, you technically can't sell your IPO within 30 days, but I do, and it doesn't really happen because like you need to take your profits. Limit order timing, oversubscribe rate, like I said. Yeah, there's a lot of technicals here, but honestly, over time, that has been less true, and it's just been the basic things that have been worked out for me on there. So let's reiterate, that's the basics. If you want a more in-depth video, I'm gladly to show it. I go over each IPO. So it's like, hey, I like the IPO thing, but he didn't go into too much detail. Well, then on my YouTube channel, subscribe and like, and then see, I come up with the videos. If Fiang's education was worth it, I made a video, popped off. Fermi, went over literally everything. And then look, if there's a bunch of IPOs, I literally went over an hour video describing each IPOs, comparing it to each other, ranking them on the same format on all of them. I went over size, I went over business model, financials, comparison, backing. See, this one was 10%. 10% of the shares were purchased beforehand by a company, and then the hype based around it. That's when I had a 5 out of 10 hype, and I added an extra point because I like the company. That's basically what I do for the IPOs. And then BMNR, you see here, I went over the MNAV and how I'm basically trading it. See, exact spreadsheet for, if you didn't follow him, follow Ricky, Risk on Bobby. He's literally the GOAT. Free MNAVs every single day. Not sponsored. But yeah, day trading, you can take your shot. But I'm telling you, easy buy and hold for me is these. And then when these things hit these MNAVs, like we saw the historic MNAV here, they will hit 2. They will eventually, like, maybe 4 is like was outdated for like, because when the first DAT came, but 2 is very possible. And then if this thing's at, I bought this thing at 1 MNAV and a good Ethereum price. Like, let's look at Ethereum. Like, I'll show you Ethereum and explain to you exactly without any of this why this thing's amazing. Look, at 5 years ago, it was literally at the exact same price. It barely hit all-time highs. The exact same price it is now, compared to something like people are raving over XRP. It's something like XRP that's absolutely gone up. Like, in my opinion, overvalued. But for Ethereum, the new technology has made it faster. It's the main way to tokenize. Wall Street and the Treasury Secretary of the United States really said, we're going to use Ethereum to build the stock market on. The stock market's only traded 12 hours or whatever hours. It's not 24. And to make it 24, you have to put it on a blockchain. Ethereum's a blockchain. Real world assets, you want to tokenize anything, put real estate on there or anything, it's going to go to Ethereum. 401ks. Trump has passed legislation to put 401ks, put Ethereum and Bitcoin into 401ks, right? They just get auto buy by the companies and by the people. They don't even know what's in their 401ks. It gets automatically buyed. So much stuff. We have the Clarity Act. We have the Genius Act, which basically passed stablecoins. The Genius Act, which literally passed stablecoins. We have Walmart and Amazon, which are looking into stablecoins, and 50% of stablecoins are usually made by Ethereum, and whenever you make and use it, it burns Ethereum, basically destroying its supply, making it rarer and rarer. Institutional investment, like I said, we have all of these Ethereum DATs, these digital treasuries that are buying it. Just there's no XRP strategies in the United States. You wonder why? Yeah, I'll probably find a old when they first eventually came out, Wall Street Journal that came out here. But yeah, they're researching stablecoin, and they're like, hey, because MasterCard and Visa, when you use it, the companies pay a fee for that. They don't want to pay a fee. There's totally workarounds that Ethereum has the potential to be in the future. And personally, just buying and holding is what I love doing. Buying and holding, and then eventual swing trade with that. So that's basically all of the trading I do, and then just using my regular account. If you're interested, I'll show you exactly how much BMNR I have and how much SBET, how much BTBT. I just sold my BTBT because, like, of the MNAV I showed you, it was at 0.5, it hit 1, and yeah, I was just chilling there. Positions, see, BMNR, a lot of BMNR right now. See, $6,000 right there, BMNR. A tiny bit of SBET, a lot of pure ETH right here, just buying and holding, waiting, and eventually I just used the extra cash to buy some other companies. But in my other portfolio, I have like Amazon, Uber, S&P 500, If you want to see my real portfolio, like everything I hold, all you do is follow me here on, oh my gosh, I'm not logged in. You have to follow me here on Blossom. Not sponsored either. You have to follow me here. I have 3.5 thousand followers. Basically, they follow me for exactly what I hold. 2 ETFs and then BMNR and SBET. So pretty holding true. The rest is cash, holding true to my strategy. But I used to see Amazon, you could see a bunch of other companies as well. But yeah, just trying to get you guys some, just trying to put myself out there for like the unconventional, because I was talking to one of my buddies. He was like, shoot, I never heard of this. Like, maybe this is interesting. No one's really heard of this. It works pretty well for me. And if you're going to start day trading, I mean, good luck to you. If you want to start investing, really good luck to you. You don't have to do it this way. Investing overall in the stock market and just holding ETFs is definitely the way to go. I was looking for a little bit to enhance my gains. Well, if you guys liked the video, hope you like and subscribe. I'll definitely be updating every single IPO, and I will be streaming live whenever I don't have school. See, like my first stream, 700, 500, hundreds, at least hundreds of people on there just asking questions, stuff, having a good time, waiting for the IPO to come out. So I'll see you guys later. Peace out.